Also, the markets are in full swing, but they resume with investors still waiting for details of the CBN's flexible exchange rate and the new window for critical transactions from prospective investors. The CBN says it's been holding meetings with stakeholders, of course, to try to get their buy-in and look at the framework, the rules, the guidelines that will be implemented by all concerned. Now, the Debt Management Office will this week hold its last bond auction for the second quarter of the year. A total of 105 billion naira, the same amount as offered in the previous month, will be sold. Now, 15 billion naira of the 5-year bond will be sold, 40 billion naira of the 10-year bond is on offer, and 50 billion naira of the 20-year bond is also being offered. I'm now being joined by Ayokunle Oluwagbomi, who is an analyst with Meristem Securities, as we take a look at the bonds market for the week. Good morning to you, Ayokunle.
Good morning, Maria.
It's great to have you join me on the program. Now, as I already mentioned, the DMO is holding its last auction for the quarter this week. About 105 billion naira worth of bonds is being offered. How do you expect investors to trade?
Very good, thank you. So, I think we should just initially get a background of what happened during the last auction in May, where same volume was placed on offer about that period. The yields traded from the previous auction from around 12.5% to around 10.63%, and that was a function of the change in the MPR tweaking from the previous level to 12%. However, at this point in time, what we've seen recently is that the liquidity level in the market has been, fairly buoyant, and this is, of course, expected because of what has happened in the market lately. The investors are expecting this flexible, the CBN's flexible interest rate framework that will also come out in, say, probably 2 weeks' time. And everyone is just being cautious as regards how to perform in the market this period. So we believe that this bill is a lot about what's going to happen in the bond auction coming up this week.
So, Ayokunle, so you're expecting that because we've seen a fairly buoyant liquid state of the bond market, that this might continue for the bond market even post the auction by the DMO?
Again, like I mentioned earlier, we anticipate that there's still going to be like a sustenance of the current yield level in the markets. So if you look at what happened from the last auction, the yields have traded from around 12.43 to about 13.74, and we expect that around this time, the yield environment is going to maintain that same level, because we don't expect it to go downwards because of the expectation of the market. Nobody wants to essentially try to tempt the market to ensure that you don't shoot yourself in the foot as an investor. You want to make sure, because you understand again that the government is essentially desperate for to get funds at this time to support the spend at this point in time. So the investors have this information at hand, and of course they're expecting that the government should succumb to the expectations at this point in time. Also remember that last week there were about 3 OMO auctions in the market with the yields offering by the government around between 10.5 to 12%. And at the end of the week, we realized that there were no sales essentially in those OMO auctions. So we believe that the market is just waiting for the appropriate time for the government to succumb to the expectations, given that they understand that the market, the government is in need of funds about this time.
Now, Nigeria's Eurobonds have rallied significantly since the beginning of the year, gaining about 8.5%. Now, very recently, the Minister of Finance at a non-investor roadshow in London actually talked about the federal government issuing a $1 billion Eurobond in the third quarter of the year. How do you think the rally will continue? Do you think the rally will continue?
So, again, the market, I believe, is beginning to factor that into the pricing of the Eurobond instruments. At the end of last week, you look at the yield environment around the Eurobonds, it was ranging between 5.6 thereabout to about 7.2 or thereabout. So I believe, of course, for the government, it's this time where the domestic market is not, they're not encouraged by the expectations of the domestic market. So they might want to, tilt towards the foreign market to source for funding at this point, because it's a cheaper alternative. And of course, the international market as well would also look at the risk components in Nigeria right now and try to, bid it upward a little bit, but I don't think it's something that is going to come anywhere close to what the domestic markets would have offered. And I believe, on that note, that the international markets, of course, in subscribing to the instrument.
Well, we seem to have lost Ayokunle there. Ayokunle Oluwagbomi is an analyst with Meristem Securities. He was actually giving us his perspectives on how investors will be trading with regards Eurobonds and, of course, bonds for this week. The federal government is actually planning to issue a Eurobond in the third quarter of this year. And so he was giving us his analysis and expectations with regards how investors will be trading. The Debt Management Office will be holding its last bond auction for the quarter this week on Wednesday, and about 105 billion naira will be offered in various bills: the 5-year bond, I beg your pardon, the 10-year bond, and the 20-year bond, which are all reopenings of previous issues. And he's expecting that investors will continue to actively trade in these bonds as they await of course, a clarity with regards to flexible forex exchange model, which will be announced by the Central Bank of Nigeria very soon. So there you have it: the February 2020, which is a 5-year bond; the January 2026, which is the 10-year bond; and the March 2036, which is a 20-year bond. These bonds will all be offered by the Debt Management Office at its auction on Wednesday.